So your client just took on a long-term liability. Yay for them, right? But as their bookkeeper, what's your role in all of this? Well, to record it in the books and keep track of the payments, of course. Let's say your client signs a promissory note with XYZ Bank and takes on an installment loan for $30,000. The first step in the bookkeeping process is to record the initial transaction. In this case, since the client is receiving the money, your cash account would be debited. At the same time, though, we now have a long-term liability that needs to be accounted for. In this case, notes payable. For this, we'll credit a liability account. Okay, next. Wait, you didn't think we were done yet, did you? As your client makes payments, your job as a bookkeeper is to record those payments in the journal. This will look pretty similar to payments on current liabilities. First, let's say your client made their first payment of $958.33, which includes both the $125 interest payment and the $833.33 payment to principal. Keeping in mind that debits come first in the journal entry, we would start with the notes payable account, which is going down by $833.33, which does not include interest. We track that interest by debiting that payment separately. From your client's end, they paid the full amount in one payment. So since our cash account is going down, we would credit it the full amount. And there you go. From here, as more payments are made, you just create journal entries like this until the note has been paid in full. Now, before we move on, I just want to mention one slight variation when it comes to making journal entries for long-term liabilities. I mean, what type of mentor would I be if I just glossed over it? Am I right? Okay, so sometimes a long-term liability is set up at the same time that a client makes a major purchase. For example, let's say your client purchased a vehicle worth $25,000. In order to make the purchase, they made a $5,000 down payment and took out a loan for $20,000. In this case, in order to create the initial journal entry, we would set things up like this. Notice that we now have a vehicle asset account worth $25,000, while our cash is being credited for $5,000 and a notes payable account is being credited for $20,000. Now, the good thing is, from here, any payment that your client makes is going to be entered in the same way as before. It's really just that initial journal entry that is different.